Hi, my name is Jeff Fretz. Welcome to Axiory's news broadcast. Here's the latest high-impact market news for the week ending June 23rd. FOMC meeting turned out to be more hawkish than previously anticipated, with policymakers seeing diminished downside risk to the economic outlook. Meanwhile, the Fed was not worried about the weak inflation label. At the press conference, Chairman Bernanke indicated the intention to complete the tapering process by mid-2014. The Fed's latest set of economic projections showed downward revision unemployment rate and upward revision at 2014 GDP growth estimate. The minutes for the June BOE showed that 6 out of 9 board members voted for leaving the asset purchase program at £375 billion. The decision to leave the bank rate at 0.5% was made unanimously. BOE Governor Mervyn King failed to convince his colleagues in his last monetary meeting, as the majority of members preferred to wait and see, as recent economic data showed that economic recovery remains stable. The pound slipped while 10-year bond yield rose after release of the minutes. In the week ahead, investors will be closely watching U.S. data on durable good orders, jobless claims, and consumer confidence for signs that economic recovery is on track. A European Union economic summit will also be in focus as concerns over the economic outlook for the Eurozone linger. The euro ended the week at 2-week lows against a broadly stronger dollar on Friday after Federal Reserve Chairman Ben Bernanke said Wednesday that the bank could soon start to scale back its asset purchase program. The euro came under pressure on Friday after Greece's Democratic Left Party withdrew from the coalition government in protest over its decision to shut down the state broadcaster, leaving the government with only a slim majority in parliament. The dollar ended the week sharply higher against the yen on Friday amid expectations the Federal Reserve will begin to taper off its bond buying program by the end of this year. The bank expects that the U.S. economy to grow between 2.3% and 2.6% in 2013. The Fed also said it expects unemployment rate to fall between 6.5% and 6.8% by the end of 2014, and inflation to edge closer to its 2% target. Today's multi-trader strategy is Hawk Trade, which is one of the average risk strategies. It made a 0.4% profit last week, and during the last 3 months, the strategy achieved these gains. The performance of this strategy is stable and managed to make between 1% and 3% in the last couple of months. That's all for today. Tune in next week for more in-depth currency news that matters to you. And don't forget to check us out on Facebook and Twitter. Goodbye.